So that allowed me to see the underbelly of the business. You're basically handling problems 24/7, dealing with tenant default stuff, tenant issues, HVAC stuff, not so brighter side of just real estate.
How is the commercial real estate world, from your perspective, different?
Well, prior to 2010, I was told that you could basically go into a conventional investment deal with zero money down. Retail is doing very well. There's opportunity with office space, but people aren't ready quite to dip their toe in that market just yet. On the risk side of things, real estate, yes, it is risky, but if you focus on the location aspect of real estate, it's going to be okay. The lack of inventory for industrial right now is mainly due to the cost of construction right now.
And the other differentiator from at least my experience was a lot of people, when the deal gets done, they're done.
A lot of the investors that you talk to, if they don't understand about infinite banking, the leverage person wants to use it because they know their rate of return on the deal goes up if they can use OPM, other people's money. Welcome to the Save Yourself podcast, brought to you by Unlimit Wealth. Today we've got John Blaylock here. If you've listened to any of it before, you've heard John in his smoothie silk tone already. Some days. We got a special guest. We got Michael Johnson with us today. What's up, Michael?
Hey, buddy. Thank you for having me.
Yeah, man. Thanks
Glad
for coming.
you're here.
Yeah.
Michael is in the commercial real estate world here in Birmingham, Alabama. Works for Engel Real Estate, and we want to have Michael on. I know a lot of our listeners are in the real estate investing world, and we feel like Michael's got a lot of wisdom, especially in the commercial space, to offer. So we wanted to have him on and pick his brain a little bit. So, yeah. Michael, how about just tell us a little bit about Michael? Tell us about growing up. You know, how you about school, how you got in the real estate world.
All right. Not very exciting. You know, had a pretty much normal childhood from Montgomery, Alabama. Attended a private school as a young kid all the way through high school. Went to Auburn, met my wife. We're still married. She's a great lady. Love her to death. Her name's Claire. We got married in 2004, moved to Birmingham. I graduated from college, had a marketing degree. Not a whole lot you can, specifically do with a marketing degree, but got into sales, worked for my brother-in-law a little bit, worked for a construction supply company for a little bit. Always had an inkling to kind of get into real estate. So one day I decided to pick up the phone. I called every commercial real estate brokerage group here in town, basically told them I'll do whatever it takes just to kind of get my foot in the door. So that led to a property management position at Engel.
Okay.
So that allowed me to see the underbelly of the business. You're basically handling problems 24/7, dealing with tenant default stuff, tenant issues, HVAC stuff. So really the not so brighter side of just real estate. But it gave me an opportunity to learn deals, to learn the pitfalls of real estate. So I did that for about 4 years, decided I had enough of that. Because basically you're just fielding, problem calls all day long, 24/7. And it's sort of a thankless position, but it's a very important part of what we do. But, if you're ever going to make money in real estate, you had to just jump into brokerage. And so that's what I did. And I did it about in 2010 when we were deep into a recession. So I started from the bottom and didn't really know how I was going to make it. So, but what I did is just keep calling on landowners, keep calling on property owners, just the cold calling aspect. And I got pretty good at it, and just, it developed to relationships, and it just got a lot of listings out of it. But my business is a relationship business, and it is a long game. So we had to sort of just identify those folks who you get along with, and just, it just kind of goes from there. It's, again, 100% relationship business, because there's a lot. My business is not that complicated. It's not that difficult, but, the relationship part can be for some people. So
no doubt.
That's where that was kind of my niche.
So what was that like out of the gate? Being a relationship business, you start out of the gate and you don't have any listings. You don't have anything. What was that like to have to just start out of the gate fresh, try to develop those relationships so that you can be where you are today?
Yeah, it was a little scary. You're not going to make much money starting out. Luckily, my wife had a good job, so she was able to basically support us for X amount of years. But, you got to keep in mind, you've got to start somewhere. And, I was probably I was about 32 years old. And so any deal I would get done, be it a small lease deal or something, was very rewarding at that time. We didn't have kids yet. So it was very scary. But with her in the position she was, I was able to do the things that I wanted. And she stood by me and saw me through. And then I told her, I said, if I can just stick this out, it'll lead to something. So, and it has. It's been great.
So that was 13, 14 years ago or so when you started.
That's right.
So how is the commercial real estate world, from your perspective, different in 2023 than it was in 2010?
Well, prior to 2010, I was told that you could basically go into a conventional investment deal with zero money down. And that sounds amazing. These days, when I got started, the recession hit, all these regulations came up and everything. Now you're at least getting 25, 30% down. And that's the tricky part for most investors, that they got to have somewhere to start. And looking at a $1 million deal, you don't have $300,000 to put down. And so that's different from where I started to before. Now it is pretty much the same. Obviously, interest rates have had a big impact on deals locally. We have in our local market, is lack of inventory. Retail is doing very well. Industrial is doing very well. Multifamily is doing very well. Office space, who knows? There's opportunity with office space, but people aren't ready quite to dip their toe in that market just yet. So, yeah.
I've got a question. Because we have a lot of listeners who are doing maybe smaller real estate deals that want to, be doing bigger deals, commercial deals. Maybe they're chasing depreciation, or they just want better cash flow. What are some things that those folks that are trying to make that transition can do to set themselves up, apart from having capital?
You mean just to kind of get started?
To get in the game, to go from doing, flipping houses, turnkey rentals, being a landlord in kind of multifamily type world, to go to commercial, apart from having access to capital. Is there anything that you see that has helped people make it?
Well, aim small, miss small, kind of get on the smaller deals if you can. Get a group of buddies, like-minded, that are willing to risk whatever you're comfortable in risking. Look, on the risk side of things, real estate, yes, it is risky, but if you focus on the location aspect of real estate, it's going to be okay. More 9 times out of 10. But yeah, get with a small group of guys, close friends that are like-minded. Put your money in a deal, get out when you can, and then roll into something else and just keep building. And that's a challenge, especially when life gets in the way, because life can be expensive.
Yes.
When you're 32 years old and you're looking at $100,000 profit, you think you've made it. Okay, you haven't. Okay, so which don't be discouraged by that, but that's just the fact. So take that whatever net you can get out of something, roll it into something else, and go from there, and just keep building. And to me, the key to building wealth in my field is never to sell that property. Yeah, I've got a lot of clients who just do not sell. They're going to give it to their kids when they pass. And, look, everything's for sale in my world. If I'm going to do well on it, I'll go do something else with it. But I've got a lot of clients with, 10 to 20 to 30 properties that will never sell. And they just focus on the debt, getting it off their books, and they're set.
I'm curious, do you think it's because of 1031ing, or they just love that property and they're like, I would never sell this?
Part of it. Yeah. Part of them just do not want to pay taxes.
Period.
Period.
And they don't want to identify a new property and go through that whole motion anymore.
Yeah. And they're happy with their situation. A lot of them are standalone, single tenant type deals where industrial or retail, it's their baby and that's their livelihood, and they're not going to do it. But then you've got a different set of folks that would rather get in, do a facelift, new roof, new mechanical, come in, and we'll flip it in 2 or 3 years and go do something else. So,
Michael, would you say, or what percentage of your clientele, the folks that you're helping acquire properties, what percent are purely doing that for an investment or just real estate investors, and what percent are maybe you got a business owner and he's outgrowing his space and he needs you to help him find another one? Like, what's that mix look like for you?
I'd say 10 to 15% are investors, and the rest of them are owner occupants.
Okay.
Meaning they'll put their business there, and yeah,
Okay.
that's pretty much it. Probably 10 to 15%. There's not a lot of, guys with the capital, that are just running around just throwing money at deals. But, the owner occupant is very desirable for a lot of folks.
Okay.
Yeah.
Sounds like the need for capital is a big need for a lot of your people.
Yeah.
Right.
Yeah.
That number would probably be a lot different if capital was easy to get to.
That's correct.
Yeah.
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 And there's ways to do that.
Yeah.
Yeah.
Absolutely. What, just out of curiosity, in that 10 to 15%, those investors that you're working with, like, what do you see from them? And then what's your personal opinion? What metric do you feel like that they are looking for? Do you think they should be looking for? Is it cap rate? Is it net cash flow? What do you think they're focused on?
Most of them are focused on cap rate. There are a select few that are focused purely on the cost per square foot. They see an office building, if it's well above, replacement cost being construction, something like that, they won't touch it, no matter what the returns are.
Right.
There are several, though, that are looking for a minimum, 8.5%, 9.5% return type deal. And they don't care what the per square foot cost is, because you could be looking at a medical building. Medical buildings are going to be $300, maybe $500 a square foot. It's all over the place, just depending on the type of construction.
So that's interesting. You bring up an interesting point. So if they're looking at price per square foot, they know what it would cost them to build a space to do what this space will do.
Right.
And if it's going to cost them more per square foot to buy it than it would to build it, then they don't want to look at anything. I mean, they're out.
They're out.
Okay.
I got one client in particular who's been doing this for forever. He's in his 80s. He's a great guy. But that's all he looks at. And he's looking at stuff between $80 to $90 a foot, and no matter what the use, if there's industrial or retail even, it doesn't matter. He just solely focused on price per square foot.
Okay.
So you and I've looked at, we've talked about some of the passive income deals, syndicates, people putting together a real estate deal.
Yeah.
And you're an investor, apart from, what you do, and a really good one. I'm curious, when you look at a deal that is not in this local market, let's say it's an apartment complex out in Arizona or something.
Yeah.
Like, what are your main, what are like your top, however many things that you are going to make sure work on that deal for you to get comfortable? Do you have your go-to things that, how do you analyze a deal like that?
Well, I rely on people around me a lot. Like I've got several business partners, and they've been doing this a very long time. If they look at me and said, "You probably should do this," I'm in. That's just kind of how I am.
Yeah.
But I know that's kind of shallow and everything like that. But it's not the deep methodical real estate guy. But I just surround myself with people who I know that and trust. And if they're in, I'm probably good for it.
Yeah, and which goes back to the relationship piece.
Yeah.
Of which is so pivotal.
Yeah.
It's so important.
And your gut too. I mean, look, you can analyze a deal to death. You can look at numbers all day long. You can look at comparable properties, what they sold for, what kind of rental incomes those are producing. You can analyze it that way. But to me, at the end of the day, it's who I'm surrounded with.
Yeah, and that question to somebody introducing, hey, here's a passive income deal. One of my first questions is, how much of your money are you putting in it? Mm-hmm. And that's very telling. It's,
Yeah, but back to that, I do question a lot.
Sure.
Like, why, and what are we looking at to resolve this issue? Because it's going to be an issue, whether it's something structural or whether it's a pending court case, something like that. Just stuff like that can come up. So you do need to look at all the minor details. The bigger picture things usually going to take care of itself.
Yeah.
So you mentioned a minute ago about inventory being low, especially here in the Birmingham area, except for maybe office space, probably
Plenty of office
space. But in the industrial commercial space, inventory low. Does that mean that when there's a a good viable property either about to come to market or that comes to market, there's some competition for that deal?
A ton of competition. Yeah, usually you get for example, a 10 to 20,000 square foot industrial type building with some office space, just industrial type. You're probably, if it's priced right, you're probably going to have 4 or 5 offers within the first couple of weeks. And that's still in this lender's market. Yeah. It's still happening.
So what sets apart, besides, somebody just offering some way out of bounds number for the property, if the offer amounts, the dollar amounts are close, what sets apart for the seller? What are setting deals apart right now? What are sellers wanting to see from their contracts?
Just the terms of the deal. Is it a cash deal? Is this guy financing? Is he looking at a 60-day inspection versus a 15-day inspection? Mm-hmm. Cash is cash. If the guy's got it, then he's going to sell it to whoever can do it the quickest. That's typically how that's still going to work.
Yeah.
But the lack of inventory for industrial right now is mainly due to the cost of construction right now. There's a lot of people would love to go build something, but you can't get the returns based on your construction costs still. So that's got to level out. We're sort of in a state of flux right now. The values of property aren't lining up with interest rates. And so there's not a lot of deals going on right now, but we expect that to change at some point. We just don't know when.
We've talked about unrealistic, with interest rates changing, a lot of people that are selling property, they still think it's worth what it was worth when interest rates were 3 or whatever.
Yeah.
And we were talking about how long does it take for people, not all, but some people that we've approached on deals where they're just they still think it's worth what it was and are not willing to recognize that the lending environment's changed.
100%. I mean, you've got folks out there. I mean, values are not what they from 2 years ago.
Right.
I mean, it's just there's got to be some change. Your value's going to have to come down because if I'm Joe Blow ABC company looking to put my business there, I can only pay what I can afford, and based on the interest rates, it's just going to be a higher number, and my payment's going to be. So the value has to sort of line up with what the value, your value is going to be. So it's tricky right now.
Yeah.
So that's a good segue. Our first couple of seasons of this podcast was centered solely on what is infinite banking, use cases, all those things. A lot of our clients, people that use infinite banking that are not our clients, real estate's a big focus of how they look to grow their wealth.
Yeah.
With the savings, the liquidity that they have.
Right.
So it sounds like I've heard you mention a lot of times, even in our short conversation here so far, that it makes sense what Nelson used to say, Nelson Nash, author of Becoming Your Own Banker, that if you have access to capital, the deals will find you.
Yeah. That's true. That's very true. I bring deals to people that I know who have cash. And absolutely, that's 100% true. They will find you.
So, Michael, that's a good segue. I mean, I know you practice infinite banking.
Yes.
And we, talking about having access to capital. Those that have access to capital, the deals find them. So, tell us a little bit about your experience with infinite banking. When did you hear about it? How did you hear about it? And
we were sort of newlyweds. We were getting ready to start a family, and my brother-in-law was in your business, and he came to us and showed us a way to maybe
the Chad,
still in our
Chad
business. Chad
yeah.
Mosley.
Yeah.
Showed us a way to sort of increase our borrowing power without really having to go into a bunch of debt. And so, he introduced that to us. And after I finally got my head around it, it seemed like a great thing to do. Yeah.
And so how would that, it's like knowing, and your system has expanded. I mean, I know you have multiple policies now, but your system has expanded since the beginning. How is that a game changer, especially in this interest rate environment, having access to capital at 4 to 5% interest only versus what you'd have to go get at Wells Fargo or whatever right now?
Yeah, it's huge. And plus, at the root core, you're paying back a bank. With the infinite banking system, you're paying back yourself, which and plus with the rates the way they are, it's a huge difference. Absolutely.
John, you did a deal with Michael recently, didn't you?
We did earlier this year, and the way it came about was I knew I wanted some new office space.
Yeah.
And so we knew that, and it was, growing up here in Birmingham, there's a lot of people that do what you do.
Right.
But I wanted the best, and so got connected with you and
Chad Mosley.
yeah, Chad Mo, there he is. And so, the whole process was, on my side, was excellent. I mean,
Good.
everything, all those things that come up in those deals, you just handled them.
Yeah.
And your network of, like, your team of people, I mean, was great. Everything was taken care of. And the other differentiator, from at least my experience, was a lot of people, when the deal gets done, they're done.
Well, it's relationships. Like, I'll go back to that.
Sure.
Yeah.
But even after we closed, and you kept calling and checking in, and if we needed resources to fix this, update that, contractors, I mean, you were there. And so, to me, I think that's one of the reasons you're as successful as you are, because it's a relationship game. It never ends.
Yeah. Well, first of all, I appreciate that. Yeah. And I take a lot of pride in that sort of thing, the follow-up type deal. It goes with any sort of business, I think, is very important. But no, you were fun to work with, and you picked out a great property, and I was excited to actually be a part of that deal. And I was very proud of it too. So, it was, my business can be, just the process of purchasing real estate. It can have its pitfalls, but once you've been through this thing many, many times, it becomes pretty easy to clarify. And look, there's always a way to get real estate deals done. You just got to figure it out, and hopefully it doesn't cost you too much money.
No doubt. Yeah, I mean, so I use my infinite banking system. I leveraged my savings to borrow money with, an unstructured loan with total control. I didn't want to ask too much about the group that was hoping the deal would fall through to buy it. But was there any conversation with the seller's agent about cash deal versus, the seller really likes, how important was a cash deal versus somebody needing to get, an SBA loan or
For
go to a bank?
Your deal,
Yes.
It was everything.
Was it?
Yeah, absolutely. I made that very clear up front when we made our offer. It's a cash. That's the first thing I told them.
Yeah.
It's a cash deal, and you having the means to do so makes the purchase price much more negotiable. In most cases. But yeah, to me, that was everything.
Yeah.
For your particular case. Yeah.
And we got it done pretty quick.
It was fast, man.
It was awesome.
Real quick. Yeah. No, I'll do your deal all day long.
Well, when I need more depreciation in a year or two,
Yeah,
we'll find another, right?
Absolutely. But no, you picked a good one. The location's terrific, and I'm excited about seeing the finished product.
Very soon.
Well,
Yeah.
That's something that gets overlooked, I feel like, and I know it does, especially even on your side of the world. A lot of the investors that you talk to, if they don't understand about infinite banking, there's this thought of, or there's two camps. There's the leverage camp, and then there's the cash camp.
Yeah.
And the cash buyer, wants to use his cash or her cash because they don't want the risk of leverage. They don't want to have to worry about the rate.
Right.
They want to be able to come to the table quick and get the deal over the leverage person, right?
Correct.
The leverage person wants to use it because they know their rate of return on the deal goes up if they can use OPM, other people's money.
Okay.
Right. Well, when we're talking about borrowing from our own savings that's within a life insurance contract, borrowing the life insurance company's money, we get all the enhanced return and benefits of leverage without all the risk, and we get all the benefits of being able to close with cash in 3 business days and negotiating that way. We get the best of both worlds.
That's right. I totally agree, and you nailed it, man.
Yeah.
Yeah, and the flexibility of, I mean, it was a pretty good sized loan against my family system. The the reality is that when you're a business owner, you got to be able to pivot and having the freedom to say, hey, we're going to take 2 or 3 months before we start repaying this policy loan through one of the entities. That was really big in a time where it was very helpful to have some breathing room and not have, the traditional bank, in the back of my head going, I've got to make that amortized payment every time on time.
You're sort of on your own schedule to a degree. You got to stay disciplined
For sure.
But yeah, absolutely. And there's a lot of people who lose a lot of sleep over that, and yeah, it eliminates that.
Yeah, it gave a lot of flexibility and gave me a lot of breathing room in a time that we needed it.
Mm-hmm.
It wasn't scary like that, but there's already, like we talked about in previous episodes, that in the game that we're all playing, there's so many variables that we can't control in trying to take down a deal or get to a goal. But if we can take that financing piece off the table, and own that debt, so to speak, it obviously it puts you at the front of the line to get the deal, but it makes the journey along the way a lot more comfortable.
Yeah, in today's lending world, the independent banking system is super attractive.
For sure.
Absolutely.
So, Michael, as we're getting close to wrapping up here, if somebody came to you, what's one piece of advice you might give somebody if they come to you and say, hey, I have a little bit of capital, looking to, I've dabbled in some real estate here or there, but I'm really looking to get in the commercial game. Obviously, it sounds like based on what we've already talked about, you would probably steer them not towards office, but towards, straight commercial or industrial on that side of the deal. What's one piece of advice you might give somebody looking to try to get in the game that does have a little bit of capital on hand?
If you're a young guy, take an educated risk is what I call it. Be informed. Do not be risk averse, especially at a young age. You can recover. You'll be okay. And again, it's real estate. It's always going to retain its value, hold its value. You may not do as well as you want to do out of it. You may even lose a little bit of money. But for a young guy, if I could go back and do something or think a little differently, I would probably be take a little more risk as a younger guy.
Yeah. Can't have 10 pieces of properties if you don't get the first one right.
That's right.
Yeah.
That's right.
Yeah.
But surround yourself with good people. People that you trust, and usually it works out. Yep.
What's illustrated with you, I mean, I heard John reference, your team. I know you don't want to be involved in every single aspect, but you got a team of people around you.
Yeah.
So that your clients are working with you. John said, everything was just handled. And I know you didn't pull the string on every single one of those things, but you have the resources that gets it done.
It's always good to have an extra set of eyes on a deal, because you kind of get, we're doing other things too. And so we can kind of get distracted, overlook something. But absolutely, when you've got a couple of people involved, I call it good cop, bad cop. You need a guy that's going to look at sort of the potential, did you take care of this, that kind of guy. And it definitely helps a ton. And it makes, because there's been many sleepless nights up until a closing or whatever that I forget something, So it's good to have good people around you. And that goes for whether it's just a simple closing or, a big investment. Yep.
Any final thoughts, John, before we kind of wrap it up with our last question?
Not really. I think we covered everything. Everything I had, we covered quite nicely.
Okay.
All right, Michael, as we wrap up, help us or tell us how you would define success as you sit here today in 2023, and then maybe expand on that a little bit and how that looks different than how you might have defined it, say 10 or 15 years ago.
10 or 15 years ago, it would be purely measured about how much money I've got in my bank account, investment deals, which are still important, but they're less important today. I think flexibility, the ability to sort of have some free time to do other things outside of my normal business is important. And just focusing on what's important. It's more of a spiritual or, sort of relaxing type. 10, 15 years ago, man, I was out the door at 7:00, churning and burning. And I'm 46 now, and I'm not as fast as I used to be. So it's a little, perspective has changed a lot, as you get older. Slow down. And sort of enjoy the moments with your family, your friends, travel as much as you can.
Yeah.
Do some fun things as you get older.
We can always make more money, but you can't make more time. Right?
That's right.
That's
exactly right. And you don't realize that till you get a little older. But when you're young, the only thing that's important is making it. And I by no means have made it, but life's good. Yep. So no complaints.
Awesome. Well, Michael, thank you so much for your time.
Yeah.
We appreciate it. I've learned a lot here. Hope our listeners have. Yeah. Really enjoyed it. Thanks, everybody, for listening. We hope to see you again on the Save Yourself podcast brought to you by Unlimit Wealth.
Thank you for having me.
Thank you.